right. There are a number of things also that benefit the more wealthy individuals, but this also helps middle class. Let me mention what the rules were. Prior under the new tax reform law that was passed about 2 years ago, if you had a loss in your business and you were self-employed, you can no longer carry back any losses. You can only carry it forward. And then even then, you're limited to only up to 80% of your taxable income from the future business. Well, what this law does is it improves losses from your business. If you have a loss in either 2019 or next year, 2020, now you can carry back all those net losses, those net operating losses, up to 5 years and offset the last 5 years of income that you had and get back the taxes that you paid on that income. So you can actually carry it back 5 years. And in case that's not enough, you then get to carry it forward forever and not have to worry about this 80% limitation. So that's a huge, big deal for those of you starting a business. And this is something you might want to consider. Your home, you're sitting there, you're looking around, you might say, hey, this might be a good time to start a home-based business, to be honest with you, especially when you look at this major advantage. Okay?
Yeah, because this is one that doesn't apply. I mean, this is one that's just kind of blanket, like this happens. It doesn't have to be like you have to be in business for some period of time or whatever, to start taking, at least on the forward looking stuff. So it's kind of really a cool thing. We're going to go over a couple other strategies really quick, and then we'll get some questions, but some of this is related to the tax. Some of this is just good common sense. I'll handle this one, Sandy, but just if you don't have any lines of credit, this is what kind of when, you should have them, right? We always maintain 2 to 3 lines of credit just in case something happens. We need some quick access to cash for some reason. Let's say you're applying for these loans and you need to make payroll and the loans are 4 weeks out. It's always good to have, a line of credit in place. If you don't have lines of credit, go grab a couple of lines of credit. You go to your existing bank, grab one at a competitive bank in case your bank decides to call the loan, then you can just transfer the loan balance somewhere else. I always recommend you go. We just did some Google searches for other places like On Deck, Lendio, and Cabbage. I personally have not got loans from them, but there are places online that you can do this if your bank is closed. Get a couple of lines of credit. That's what they're for, times like this when you need quick access to cash that you can maybe float it until some of this grant money comes through or something like that. Sandy, you want to talk about the 401k
This
drop?
is really interesting, okay? Normally, if you have a 401k or an IRA, you basically can't take out any money until you're at least age 55 and a half. There are some exceptions like first-time homeowners and certain medical type stuff. But under the new stimulus package, now you can take out up to $100,000 without that 10% penalty, even if you're under age 55 and a half. So you avoided the 10% penalty. Now the catch is you have to pay tax on the money, but they thought about that and they're letting you stretch it out over 3 years. So you don't pay it all this year, you can stretch it out over 3 years. Now, a lot of people I know are going to use this and maybe fund life insurance or annuities and things like that and sock away all this money to be on a tax-free basis, which is another way of doing it. But one really interesting thing, I don't want to teach you how to game the system, but I will give you a little bit of tips. Some states have interesting rules. Like California, you're taxed on anything you receive from your pension distribution. Some states like Illinois, you're not taxed. So a good example like this, and you have to know what your state rules are, is you can let's say you put $50,000 into a SEP, you take an immediate deduction for both federal and state purposes. And then when you take this $50,000 out pursuant to this provision, it's not taxable. It's taxable for the federal, but it's not taxable for the state. So you've made yourself, $2,000-3,000 on doing this because you're not paying tax on the distribution, but you're getting the deduction when you put it into the plan. I mean, it's a way of gaming the system in a sense. They didn't quite think about the state tax implications when they came up with this thing. So be aware of that. You want to check out what your state rules are. But generally, distributions from these 401ks or IRAs, which I don't recommend if you can avoid it, but generally are taxable. But at least you have 3 years to pay it away, to pay tax on it.
Yeah, and avoid that 10% penalty. It's an interesting strategy, and you have to prove that you've been affected by the coronavirus, and things like that. I don't know exactly what the proof there is, but I don't think it's going to be onerous. I think it's going to be pretty simple. I think you can probably just state, it's probably going to be stated, hey, I've been suffering financially and I need some money out of my 401k. You can also repay that back to the 401k if you need it, just want to take it out and put it back in. You can also put it back in within 3 years. So, and not have any issues, right? So you can replace it if you just want to take it out kind of as almost as a loan. It's not officially a loan, but you can put it back in if you want going forward during those 3 years as well. So you can replenish that thing without any issues. Mortgages, if you are in a place where you need it, I mean, most places, you've seen this a lot in the news, but you can also call up your servicer and tell them you're having a hard time, and they will work with you to do some fees. They can't do foreclosures. They can't charge, fees for late fees and things like that. And right now, if you work with them, a lot of them will defer payments, so you could free up your mortgage for a couple of months potentially to help with cash if you're in a spot where you need that money. That's just a good thing to know. That wasn't a part of this bill, but kind of came down from prior to this bill. But that is something you can do. Work with your servicer. They'll have their own different ways of doing that and rules. Also free up cash with a refinance. I just, just to kind of see the process, I called up, I refinanced a truck loan in 30 minutes. I was like 3 years into it. So I just stretched it out, saved a couple $100 a month. It's a good idea to do if you're worried about cash or if you're hurting. Definitely go talk to your banker and try to refinance a few things.
I want to call your attention to a couple of things. I have a book, I don't know if you can see this. It's called Achieve Financial Freedom Big Time. A lot of people may not have heard of this. They know my other book, Lower Your Taxes Big Time. But this one has a lot of really cool information. I wrote this right after the 2008 crash. So when it was a horrible time, that's when I wrote this thing. And there's a lot of information in here that's, having reserves, what you need to do to negotiate things like this. But one of the chapters I put in here, and there's estate planning and how to get out of debt forever. And I mean, it's a really cool underused book that a lot of people don't know about called Achieve Financial Freedom Big Time. But one of the chapters I put in was how to save money. And I cited about 40 different things here, ways where you can save money, cut your costs. In an era like this, where you are getting subsidized from the government, you still want to cut costs. One of the ways, obviously, is to maximize your tax deductions for next year and in 2020 and 2021. That's certainly a big, big deal. But there's some other things you can do here. For example, here, one of the things I mentioned is you have any spare change, put it in a piggy bank. You'd be surprised that over a month, I tried this for a while, you'll probably accrue about an extra 20 to 30 bucks a month every month just by putting a little spare change in the piggy bank. You raise your thermometer in the summer from 73 to 74, and lower it in the winter, maybe to 68. A lot of people don't know this, but for every 1 degree that you change your thermometer, you reduce your utilities by about 7%. I want you to think about that. I mean, that's a really, really major deal. Yeah.
Okay, so there's that you should definitely check out Sandy's book. There's a ton of great tips in there. But I want to make sure we get to the next piece. Okay. We got a ton of questions coming in here. Real quick, I just want to say one of the things that we've been talking about and focusing on here at Taxbot is, it's a great time, especially if your business is maybe not doing as well, to really focus on the efficiency of your business. One of the things that where our expertise is tax deductions, right? But it's a great time to start thinking about keeping as much money as you can for this year based on maximizing those tax deductions.